Hi, this is Pat Moorhead with More Insights and Strategy, and we are here with Principal Analyst of FinTech, Melody Brew. How are you doing?
Oh, I'm good. It's been a crazy week getting the kids back in school, but they're back in. And thank God they're back in person. Let's hope it stays
I
that way.
know,
Knock on
I know,
wood.
it's wonderful. Yeah, I want to say I dropped off my final remaining kid. He drove his own car, but yeah, I've got two in college and one out of college. It's my wife and I are empty nesters. Who knows what trouble we can get into, what travels we can take. I have no
Yeah.
idea where it's going, but the great thing is that my wife has her own life. That was, she was a mom, but she was also a business owner, and she has her hands full with multiple horses, and she even works for More Insights and Strategy too. So I'm
Yeah.
hoping no huge changes there.
Yeah. Well, and you guys did the sports thing also, but I have, mine are back in sports now. So even at the seventh grade level, they start early morning practices. So one kind of bad thing about them being back in school is that they have to be, well, we all have to be up before the sun. So my
Right.
my seventh grader starts football practice at 6:45 in the morning.
I don't miss that. I don't miss that stuff at all. I get at
We
least
take our sports seriously here in Texas.
really do. But we have an exciting show. We're talking about the hood again. We hit that last week. Let's get an update on how this is going. We're going to talk about buy now, pay later news of the week. We're going to also talk about maybe having your wine and drinking it too. All the otherwise known as liquid assets, which will prove that there truly is fintech for everything. Uh, Based on our last show, we were going to talk a little bit about on this show about fintech AI. We're going to hit that for a little bit, and then we are going to end with the acronym of the week. Hashtag AML. I'm not going to talk about it, but let's dive right in and talk about Robinhood. I think we changed last week. We changed the title two or three times based upon where it was trading. It looked bad, and then it looked good, and then it looked bad again. So, what in the heck is going on with Robinhood?
It's just been such a roller coaster. It's so crazy. But so they had their first earnings after going public. So this happened just on Wednesday. Right after that, their stock dropped about 10%. And a lot of this was just because of what's happening in their cryptocurrency. They have the cryptocurrency accounted for just a huge percentage of their revenue in Q1. 52% of their transaction related revenue, and that was up 17% from the first quarter. But more than 60% of their funded accounts traded crypto in the last quarter. So what they're saying in the earnings is that they're warning against a decline in crypto. Um, and of all of that, I think 62% of that was Dogecoin. And what's really ironic about this is Dogecoin actually started as a joke. It
Right.
was
Wasn't this an Elon Musk thing?
well, yeah, he kind of got he sort of got on the bandwagon with it. He was on Saturday Night Live. Even he couldn't explain what it is because they kept asking what it is, and his answer was like, "Well, it's decentralized." It literally started as a joke. It was like a meme of some character, and it was made to make fun of cryptocurrency. And then it just sort of caught hold, and because people like Elon Musk were like, "Oh, Dogecoin is the next thing." It gained popularity, and now people are trading it. Well, I think that now it's sort of losing its popularity. Elon Musk on Saturday Night Live said it was a hustle, and so the trading of that particular cryptocurrency has taken a decline on Robinhood. So I think that was a big part of why they took that dive. So it's almost down to close to where well, yeah, okay, so you can see there. I think it came out at 34, I believe. So after it had gone up pretty high, then, we were sort of thinking maybe it wasn't a broken IPO. Now it's going back down. But, again, like we said last or the 2 weeks ago, you can't really count them out. They seem to have 9 lives.
Well, I just
One
can't.
other thing
So
that
I
I
was
thought was
always.
really interesting. Go ahead.
Oh, sorry, I cut you off. I was always under the impression that they were making all their money off all these meme stocks like AMC, GameStop, and stuff like that. So it sounds like they're making all their money off a second-rate cryptocurrency that really has no incremental or nominal value.
Yeah, it was 52% of their total transaction related revenue. So that's a lot. And then the other part of it that I found really interesting is that 17% of their revenue from last quarter, which is 88 million, a little over $88 million, came from selling data on crypto trading.
Right.
So that's also another thing that, obviously, if you don't have the crypto trading, you're also not going to have that data on the crypto trading. I would really love to know who their customer is on this data.
Right. Right. Well,
That
not to put you on the spot, but even overall, I mean, any thoughts on, how Robinhood operates, where basically Robinhood will share all of the forward information on things like stops to sell it to the hedge funds to be able to essentially know how far they have to take a stock down to drive it down, which obviously helps the shorts.
right.
And I'm really surprised the SEC hasn't jumped more in this. They jumped all over SPACs, which, but they don't seem to have jumped into any of this look ahead data.
Yeah. Yeah, I think that, and that to me was like that's a really large percent of their revenue on that little bit of, just on data on crypto trading.
Right. Right.
And
Oh, so in other words, it's the data. Sorry, it's the money they made off the data on crypto trading as opposed to fees or something like that.
so 52% of their transaction related revenue was from the trading. So that was from the cryptocurrency. 17% of their revenue was selling data from the crypto trading.
Okay. No, I appreciate that. You said that. I just wasn't paying attention closely enough. So,
Well, let's add the disclaimer again that this is not investment advice.
oh my gosh, I didn't even do that. Yes. Yes. The More Insights and Strategy podcast, in particular, FinTech Friday, is for educational and maybe entertainment purposes only. Don't trade based on what we say or what Melody says. In fact, just do the opposite. Okay. Just keep us out of this. So, hey, let's move to the next topic. Buy now, pay later. BNPL. That should have been one of the acronyms of the week. Is big news, and PayPal is in the industry. Sorry, is in the news as of late. What's going on here?
Yeah, so PayPal just announced this past week that they're dropping their fees on buy now, pay later. So in order to kind of keep up with whatever all the other buy now, pay later firms are doing in the market, they have dropped their fees. I think that this is interesting, and because we've talked about this in past podcasts, that PayPal recently raised a lot of their fees, and I called them out on that publicly. And
Right.
as you know, I'm not
They appreciated that.
It's funny. As somebody recently, just actually last night, asked me, if I've always been that way, like just willing to kind of call things out and say things and not really worry about sharing my opinion. And I was like, I don't really know. I mean, I think it's just partially like how I am, but also my boss encourages it.
Absolutely. Absolutely.
I mean, that's what we're here for, right?
Exactly. So we get paid for our opinions as opposed to we're not making the news, we're not reporting the news, we're taking what's going on, either what happened in the past, what's happening today, or extrapolating that to what we think is going to happen in the future. So yeah, we have to have opinions.
Yeah. And so I think, what's happening here is that PayPal realizes that they have to compete in this market. I also think that because the market is so hot, that regulators are starting to take notice of it. And it really is a gray area. It's very right. It's regulated right now, kind of state by state, because there isn't typically a credit check. It's not those
Right.
purchases aren't protected, or the purchases and the purchaser are not protected under the Fair Credit Reporting Act. And so I think that there's going to be some kind of crackdown on regulation in this space. And by having the fees there, it's treated a little bit differently, kind of like more like a loan than it is a purchase. So I think PayPal is kind of paying attention to that in two areas. Credit Karma just recently did a survey that showed like 38% of users missed at least one payment. And I think that that's just showing that people are getting in over their heads with these types of
Right.
purchasers, and that's when the regulators are going to come in.
Wow. Who would have thought there would be so much discussion about something that seems so simple? But, whenever you're dealing with somebody's money, anytime there has to do with credit or fake credit, where there's really not credit here.
Right.
Yeah, but a huge opportunity for these smaller companies to outwit the old companies like PayPal.
Yeah.
It feels funny saying that,
Right. I
That's
know.
what's
And
great
I
about
think,
this.
again, it's like this, I really do feel like the buy now, pay later industry is sort of puts like a little bit of a spotlight on just where we are in general, economically, spending habits, everything. So I just think it's just it's interesting to watch.
For sure. And, let's move to the next topic. So, fintech, uh, you should never be surprised at what is going to pop up next. And I appreciate you adding these topics because otherwise I would never see them, but you're always on the hunt for this. So, there's actually an investment platform for wine enthusiasts. What?
Yes. Yes. So, we talked about a while ago that the farm investment platform, this is kind of similar to that. So this is VinoVest. It is an investment platform for wine collectors. I spoke with the founder. His name's Anthony Zhang. He is a kind of younger guy. Went to USC. Actually, dropped out of USC to start this business. He was a Teal fellow, and
That
I
says
say
it
he's a
all.
younger guy because he was what's that? Says
It
it
says
all.
that say it all. Thiel fellow, you mean as in terms of Peter Thiel, correct?
Yes.
Okay.
I think it's pronounced Teal, but I don't know.
Thiel, I'm sorry.
Um,
I speak German too. I should know these things.
but yeah, so he was actually at USC. I didn't know him from this, but we figured this out in our conversation. He was at USC at the same time my daughter was, and she's 23. So he's pretty young, really smart guy, grew up in Europe, wasn't necessarily a big wine drinker, but was around wine a lot. Started a food delivery service when he was at SC. I think that was funded originally through Shark Tank, and then got the attention of Peter Thiel somehow and started this platform. So what's really interesting about this is that you can invest, the minimum I think is $1,000. You can invest in wine. They do all the storage, they do all the insurance, they take care of everything for you. And it does have kind of the same sort of portfolio diversification that you would have, from sort of any other sort of alternative investments. But you kind of get the fun and the coolness of like actually collecting wine. And wine, interesting enough, has consistently outperformed the stock market for the last 30 years. And it has been something like in during economic downturns like the pandemic, wine consumption goes up, so wine prices go up. So the other part of this is that because they store it and they do all the temperature control and all of that, they do all the insurance, if you have a bottle of wine and say, your daughter's going to get married or something big is happening in your life, and there's this
Right.
bottle of wine and you decide you want to drink it, you can drink it. If it's increased in value, now this is where it is literally a liquid asset.
Right.
If it's increased in value and you decide you want to sell it, they put it up for auction. They sell it to the highest bidder and you can cash out. So
Wow.
I just think
I'm
I think it
impressed.
just shows like there is a fintech for everything.
Yeah, I'm not a huge wine drinker. I'll sign up for the lowest one. I don't know if you're the Grand Cru type of person, but anyways, I think that's pretty cool. By the way, and we do have a comment from the Peanut Gallery here. A guy named Daniel Newman says, the fintech guy and woman, I love it. I do too. That's why we do fintech. That is Daniel Newman, my partner in crime on the 6-5 podcast that we did at 9 o'clock every Friday. I think you might be a little jealous that we're in here, but anyways, I don't know.
Join
We'll
us
see.
sometime.
Daniel loves to talk stonks and investments and tech, so we should have him on here. I don't know. Okay, let's go to our next topic. So last show we were talking about, hey, Melody, you cover a lot of different topics in fintech, things related to fintech, real estate tech, frickin' wine tech, ag tech, all of these things that are kind of related based on the underlying technologies that they use. And I would even say risk portfolio of them, i.e. high risk. But one of the things that you had talked about that was in your, you're looking at fintech and AI, and it's funny. Even the old school financial institutions appear to be ahead of other enterprises when it comes to AI related to risk, credit scoring, and stuff like that. But what are you looking at right now? What's cool? What's different?
Yeah, so this all kind of started. I wanted to just dive into that because that does seem to be that's a heavier adoption on that side of things from financial services. And then I came across this Bain study that showed that the pandemic actually widened the productivity gap between like more and less productive companies. So the top quartile by 40%. And that was in the areas of time, talent, and energy. So these are all processes, right? So then
Right.
that kind of got me thinking of like, well, AI solves a lot of those processes. And in financial services or even in financial services inside of other enterprises, so like spend reconciliation, payment authorization, data entry, all of these kind of AP automation and AI enabled like OCR, which is optical character recognition, that like all of these solutions free up so much time for people to actually focus their energy on more strategic tasks. So there's so much that's going on here that I think from things inside of companies, like what's happening in terms of payments, everything that's happening in terms of customer service, so chatbots, delivering more tailored solutions to customers. I actually sometimes really don't like chatbots. I don't find that I get to where I need to be fast enough with them.
Right.
I end up like, if it's like, press 0 for customer service, I'm like, I want to talk to a person. But the interesting thing about this with machine learning and with AI, they're actually getting smarter. And so I think that, that's kind of part of this thing is that what we're learning or what they're learning and what we're seeing. And I think, the other thing that's really interesting is just the bias and the auditing and what has to happen. And you probably see this a lot, because I know that there's obviously AI outside of financial services, but what needs to happen in terms of auditing for this adoption to really take hold across all of the industries?
Yeah, it can't be
What's your take on that? Because I think
it can't take so deep learning is typically a black box. You sometimes don't know why you are getting it. This is at least what I saw, a lot of the financial industries backtrack off of deep learning and moved kind of up a level to machine learning that is actually auditable. But now there's some technology that's out there that does some back processing to determine, why wasn't that loan approved, right? Or why was it rejected? It gives you some auditing capabilities to do that. But in an industry where microseconds matters, fintechs have bellied up to the bar for all kinds of technologies to give them an edge. And whether it's having a more sticky environment. I'm going to be writing an article. I didn't know this is where it was going, but it was AI with a financial institution that's using it for to know exactly when, as opposed to teeing up an action post the action over email, it will automatically prompt them for something with immediacy as they're in the session. Okay. Which, shaving potential days off or months off of a potential action. And I'll share that. I'll share that with you.
Awesome.
It's pretty exciting stuff.
Yeah, I mean, I think, like you said, in terms of fintech, seconds, minutes, that really matters. Like you lose that time, and that's time that a competitor can take your customer.
Yeah, exactly. So last week, our acronym of the week was Know Your Customer, KYC, not to be confused with KFC or anything else like that. But our acronym of the week is AML, and I'm not going to blow it like I did last time where I said what KYC meant. So go ahead. What is AML?
AML is anti-money laundering. So this actually ties into KYC, what we discussed last week, because KYC is really actually the first step in anti-money laundering, because it screens for any links to terrorist or criminal activity, any public figures or politicians or anything. Basically, this is just a way to make sure that people aren't laundering money. And when, prior to digital transactions, prior to, fintech, this kind of was done with the Bank Secrecy Act, which is, you've probably heard this before. If anyone deposits $10,000 in cash into a bank, they have to report that. So, smaller deposits, things like that. That only started in 1970. And by the way, really fun fact, money laundering was actually not illegal until 1986. So even though they were tracking with the Bank Secrecy Act, even though those deposits were being tracked, that was actually just being tracked to find criminal activity. The activity of laundering money was actually not illegal. It was just to find the drug dealers and the cartels and things like that. But financial services firms are required to have AML compliance to track suspicious transactions and track customer information. But interesting enough, linking back to AI and machine learning, is that a lot of those things, they can help with that. So they can kind of detect small things that maybe aren't being picked up in, kind of human transaction. When something from the Bank Secrecy Act does trigger something in a bank, a lot of times they're false positives, and then somebody has to go back and spend their time to retrace those steps and find out what's really happening. But with actual, not people, when it's not a person doing it, it saves a lot of time. And then somebody can actually, use their time to do actual strategic work, not trace.
So somewhat related to this, and maybe we can hit this for the next show, I was intrigued by how much action there was in my Twitter sphere on the fears of Jack Dorsey taking his Twitter ban list and then banning people from doing financial transactions with his fintech stuff. And, so anti-money laundering, right, trying to find the drug dealers, but banning people who might have a different viewpoint on Twitter is starting to scare a bunch of folks. I'll share you some. These aren't crazies either. These are very smart VCs, billionaires who, are unhappy at the notion that the Twitter ban list could be used to ban people who to do financial transactions.
Yeah, that's some crazy talk right there.
Yeah, I'll send you the links. I mean, it was remarkably not crazy to me. These aren't, far right wing nut jobs. These are people that I respect. But anyways, that's what was going. It's what I thought. It's funny. I thought that we were going to talk about AML, but it's anti-money laundering. So I missed it. But hey, we're at the end of the show here, and we like to have some final thoughts. Mel, talk about anything that's on your mind. You've got some events coming up. What's going on?
Yeah, so I think by the next show, I kind of will wrap up. I think based on all of what we've talked about and all of what's happening in AI, I think what I thought was going to be one article or one study is probably going to be more than that, but at least one of them I will have published by then, so we can kind of review that. I also think what's really interesting is just to talk about what's happening in deal flow. You just brought up, some of these VCs. Last quarter was the largest funding quarter on record for FinTech, a record that VC-backed FinTech companies raised $30 billion last quarter. And I did just a quick calculation right before this podcast, a quick calculation of ones that were announced. So it's quite possible that there are more than this, ones I don't know about. But just this past week, 1.1 billion was raised. So, and we're coming off of we're not quite out of the summer. So,
Summer
is typically slow for VCs. Everybody's out in the Hamptons doing their thing.
Exactly.
So 1.1 billion just this past week. And again, that's just what I'm fully aware of. There's
free money. I mean, we're heating up the economy. Dollars worth a lot less. Here we go.
It's crazy. Yeah. So, and then, fall conferences are starting to happen. So we've got Finovate in the fall, Future of FinTech. These are conferences that are going back to being live in person. I'm not quite sure if I'm ready for that. I'm gonna see. I don't know. You probably got the email that CES is requiring vaccinations. Yeah, I'm not sure. I think this is a wait and see thing for in-person stuff.
I'm motivated to do this, and I think everybody has their risk tolerance. And I mean, my God, I had COVID, monoclonal antibody treatment, double vaxxed. I mean, I don't feel like I'm going to be giving it to anybody or endangering anybody going. I was supposed to be in Seattle last week, and that got canceled due to a lot of issues. But I'm ready. When my clients or the industry is ready, I will be on an airplane. In fact, I got an invite to go to Germany week of September 6th to an auto show. So I might do that. We'll see. But hey, thank you so much.
Nice to be able to actually see people and talk to them in person. I mean, as you know, I went to the races in California with Qualcomm.
Right.
None of us got sick. We're all fine.
That's good. That's good. No, this is great. So I would want to thank you, Mel, for another great show. Our time is up here, but I can't wait until next week. Same time, 3:00 Central on Friday for FinTech Friday. I hope you like the show. If there are things you didn't like about the show, hit up Melody on Twitter. If you liked things, you can hit me up on Twitter. No, really, tell us what you like, tell us what you didn't like, and subscribe if you're listening to this, and subscribe if you're on YouTube as well. So with that, have a great weekend and have a good day. Be safe.